afternoon, good evening, whatever time of the day or good morning you're watching this video, right? So welcome back to my channel, Top FX. So today briefly we're going to be talking about a very essential topic in the forex market, which is beginner's guide to forex, right? So I realize that most people have been asking for this topic, right? So I'm going to be breaking it down for you guys just to know what it is we're talking about in this video, right? So quickly let's get started. Before then, let's pray in Jesus' name. Father, I thank you for yet another opportunity. Be that exalted in Jesus' name. Help us with the Holy Spirit. Give us wisdom. Give us understanding in Jesus' mighty name. Amen. So, welcome back to class. So, my name is Adekweju Elijah, as you all know, or maybe not all. So today I'm talking about beginner's guide to forex. What is forex? FX trading hours, bulls and bears, stop loss and take profit, forex analysis, market structure at all participants, forex code basic, speed and ask price, the spread, the pip, lot size, lot sizes, trading discipline. So let's get started. What is forex? You might want to ask yourself that question. What is forex? Well, in fact, most people have been asking that question oftentimes. What do you guys mean by this? Forex, what are you talking about? So forex is simply the exchange of a country currency against the other. Like we have US dollar that is against pounds, for instance. Just for example, under here we have Great Britain pounds against US dollar. So we are trading two currency pairs together. You can just open the chart and see just GBP as a market you're gonna trade. No, you are either pairing it with another country's currency, maybe pounds versus Japanese yen, pounds versus Canadian dollar, etc. So, or trading one currency pair against another. Just in a nutshell, just can understand that it's very simple. Alright, so the forex market is very simple. You trade currencies, we trade currency pairs. That's what we call it. So let's move to the next one. Size of the market. FX happens to be the largest trading platform in the whole world with daily cash flow of about $4 trillion, even above. Right now we're trading about $6 trillion daily, which retailers constitute about 1.5 to 2 trillion dollars daily. So it is the largest market you want to trade, guys. So imagine you just getting a very glimpse of the market, a token from it, maybe just $500, $1,000 from the market. Imagine that. If you're trading above $4 trillion per day, that means you could actually get your share from the market, guys. It is that simple. So that is how large the market is. Next topic, we have forex trading hours, the bulls and the bears, stop loss and take profit, forex analysis. So let's go there. There are 4 sections in the market. That's the forex trading hours now. We have the London section. We start from 8 a.m. in the morning. We have the New York section. We start 2 p.m. We have the Sydney section. We have the Tokyo section. However, every day we start with the Sydney section by 10 p.m. at night. That is when the market opens at night. I'm talking based on Nigeria time right now. So we start by 10 p.m. Though recently, this past few months, just a month ago, I think market start closing by 11. If I say yesterday, it's closed by 11. So, but however, the general market time opens by 10 p.m. based on the Sydney section. The next section opens by 12. That is the Tokyo section joins, and the Sydney section closes by 6 a.m. in the morning. I'm talking about Nigeria time now. So it closes by 6 a.m. in the morning Nigeria time, while Tokyo section still continues. While it's still continuing, the London section opens by 8 a.m. and the most volatile section in the market, it is the London section, and New York section opens by 2 p.m. to 3 p.m. in the afternoon Nigeria time. So however, the place where the market is most volatile now, it is when the London section and the New York section overlaps. The volatility is very, very high. That means both countries are awake, the major banks are open, and they are all active in the market. So the volatility is very, very high. And in fact, it's the best time to trade actually. So quickly, let's go to the bulls and the bears. Who are the bulls? The bulls are the buyers, while the bears are the sellers. The bulls are the buyers, the bears are the sellers. Simple as that. Alright? You want to go and buy a sachet of tomato, you are the bulls. The person selling to you is the bear. It's as simple as that. Alright, stop loss and take profit. Let's talk about that. It's a system used to control our loss and profit margin. Alright, stop loss, for instance, ideally, what does it mean to stop a loss? Stop, then loss. It means that when I'm on a trade, I want to know how much I'm willing to lose on this trade. For instance, I'm on a trade with asset of $50, and I want to know how much am I going to lose. Probably 10%, which is $5, or 1%, as the case may be. So I want to set my stop loss. There's the system whereby we set it on our chart. We set it and it closes automatically. If the market goes against us to that level, we are losing just $5 instead of losing the whole of the asset. So take profit as well. Oh, I want the market to go up to a certain level, and I'm taking my profit. You don't need to be online at all the times. You just set it and it automatically closes by itself. So that is it. Now talking about analysis, the forex analysis, we have majorly two types of forex analysis. In fact, generally analysis in all financial market. The stock, talk about the crypto, talk about forex. These are fundamental analysis. We have technical analysis. The fundamentals deal with the news. We have CPI, we have NFP, series of news that comes up daily, once in a while, quarterly, thereabout. So those are what the fundamentals deals with. While technical analysis we trade based, or we analyze the market based on previous, present reactions or appearance of the market. What the market has done in the past, what the market is doing currently, that is what we analyze the market based on. Oh, and we want to use it to guess or to look into the future, the present future anyway. So that is what we call, those are the two types of analysis we have in the forex market. Going to market structure or participant. So interbank market, this comprises of world's largest banking institutes or banks. Inside this as well, you can get your countries involved. Countries trade for the purpose of adding value to their currencies. They don't trade for the purpose of making profit, unlike we the retailers, right? So companies comprises of this they are the world's largest banking institute or banks rather. This comprises of the world's largest banking institute or banks. That is the interbank market. I said interchange. Pardon me for that. So in this, you see your countries, you see major banks, the whales in the market, the big guys that can pump in trillions, millions of dollars into the market. So the hedge funds, under these hedge funds, you can find your broker in between them, the ones that stand between the retailers and the major banks, right? So the third one, we have the retailers, the retail traders, which is you and I. In fact, somebody that has $100 million might still be a retailer in the forex market, because how much? Imagine out of about $7 trillion we trade every day, you put in $100 million. Does that amount to anything majorly? Of course not. So that doesn't really categorize you as a whale in the market yet, probably, right? So the retailers, we trade for the sole aim of making profit. I'm not just gonna hop into the market just for fun. I'm not gonna put in my $50, $100, $1,000 just to make fun. No, I trade to make profit, right? So that is it. Those are people that participate in the market. So let's talk about the base currency and variable currency. So forex codes show two currencies, like what I showed you earlier, the GBP and the USD. So the base currency, which appears first, which was the GBP USD I showed you, the GBP was the base, and the quote or variable currency, which appears last. The price of the first currency is always reflected in units of the second currency. Now, example below, I'm using euro right now. So euro versus US dollar. The euro represents the base currency, while the USD represents the quote currency, as simple as that. So the next topic, bid and ask price. The bid, which also called the price, the sell price, is the price that traders can sell currency at, and the ask or buy price is the price that traders can buy currencies at. This may seem confusing as it is only natural to think of bid in terms of buying. So just remember the bid and ask or ask terminology is from the broker's perspective. Now, this is actually controlled by the brokers, right? So it's actually controlled by the brokers, but this is how we see it in the market. We have the bid price, we have the ask price. The bid is where you sell, while the ask price is where you can buy, right? The bid is normally always at the left hand side, while the ask price is always at the right hand side. Down to the next topic, the spread. The price to buy a currency will typically be more than the price to sell the currency. Yeah, this is where the brokers, the intermediaries between the major banks and the retailers, this is where they make their money. This difference is called the spread, and it's where the broker earns money, yeah, for executing the trade. Do you think we just have Xness, for instance, or all other major brokers, and they just make all of this for fun? They don't do it for fun. They do this to make profit as well, just as you making profit. So they make their profit with this method, the spread. Alright, so spreads tends to be tighter or less for major currency pairs due to their high trading volume and liquidity. Alright, so we have currencies such as euro is the most widely traded currency pair. So it is no surprise that the spread in this example is just 0.6 pips prior to a particular screen I showed earlier. Yeah, look at it. The spread in between is just showing 0.6, right? So it's the largest. It depends on your broker, anyways. Depends on your broker. All right, and GBP as well is another major pair that people trade worldwide. Another major trade pair people trade worldwide. So the spread is not always been wide, and we have some brokers might even give you zero spread, but they charge commission for each trade they enter. So that's how they make the money. I think I posted something on my group yesterday. Where is it? On Telegram. Yeah, I posted something yesterday. Yes, here yesterday I posted this. I said, how do you feel when you first see this? Look at the spread. The spread is this, the space between these two gaps. That's what I call the spread. This was about 11 yesterday night, 11 p.m. Nigeria time. So the spread got this wide yesterday. So I remember the first time I experienced this, I was like, "Whoa, what?" I had to message my broker and said, "What is wrong?" I was in profit, but before I knew it, the spread got wide, and it was even more than this. And I was running at loss. I was like, "Kilo day, what happened?" Pardon me for the language, right? So what happened eventually? So I was like, "This rain." That was my first experience. So I messaged my customer service. They were like, "Oh, that is what happens at this time of the day, especially 10. Why? Because the major or the major runners of the market, or the major traders in the market, which are the New York, the London sections, the major sections in the market just closed, and we are just going to a less volatile section, which is the Sydney section. So people are already sleeping. Those sections are not really active. So the brokers are going to charge you very high for any trade you're going to be entering. So that is why the spreaders, imagine I'm buying now. If I'm buying on this trade, I'm not the buy is not going to start from here. It's not going to start from here. It's going to start from here. I imagine market is already dropping this part. So I'm already running at loss. So they don't want you to enter what's it called, trade at this junction. It will be difficult for you to enter a trade at this junction because the spread is so wide. And this is because this is even GBP. If you go and check some other currency pairs, bro, you're gonna see a very wide spread that even my screen won't contain it, right? So that's how the spread stuff works, right? So back to where we were. So that's what we mean by spread. That's how the brokers make their money. So the pip, talk about the pip. You might have hearing this language in the Forex from Forex traders. So a pip now, which stands for, the full meaning is point in percentage. Point in percentage is the unit of measure used by Forex traders to define the smallest change in value between two currencies. This is represented by a single digit move in the fourth decimal place in a typical Forex code. For example, if the price of Euro USD moves from 1.1402 to 1.1403, this will be a 1 pip or point movement. That is the 2 there. It changed from 2 to 3. That is a 1 point pip movement. Let's go to the chart. Let me use the chart to simply explain that. Metaphor. So I'm using GBP still. Oh, sorry, my data is off. So I think I'll explain that later. My phone is on airplane to avoid calls and distractions. So just understand this. Any single movement we have in the Forex market on the chart is what we call pip. At the back of your mind, guys. Pip movement. But they say how many pip movements stop loss are you setting? Generally, people set 20 pips, 15 pips, this and that. How many take profit pips are you setting? 50 pips, 100 pips, blah 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 blah. So that's what it means. So how to calculate the value of a pip? The pip value is calculated by multiplying one pip, that's 0.0001, by this. That is based on currency pairs now, such as Euro USD, GBP USD, Which other one? Canadian dollar USD. Unlike other pairs such as Japanese yen, those currency pairs that come before the dollar, JPY USD, all those ones, their figures are quite different. So unlike those ones, calculating based on the major pairs now. So by the specific lot or contract size. For standard lot size, this entails 100,000 units of the base currency. Remember the base currency we talked about. And for mini lot size, this is 10,000 units. We're going to talk about lot size very soon. The value of 1 pip for the euro, let's use euro for instance now. Standard contract, when we standard contract, standard lot size, which is 100,000 units, is calculated as follows. Pip value is equal to contract size times 1 pip. Pip value is equal to 100,000 times 0.0001. We are going to get pip value $10. So for each pip movement under a standard loss size contract, that's contract size, under a standard loss size, we are getting $10 in profit or in loss. So every 1 pip move in your favor translate into a $10 profit, and every 1 pip move that goes against you translates into a $10 loss. And remember how tiny 1 pip move is, from 0.2 to 0.3. So that means there is a standard loss size which is 100,000 units. You're already risking or gaining $10. So before you start seeing people online making a lot of money, and you want to just opt into the market and use 100 loss size, bro, your account is gone. Right, so there is a loss size now. So a loss size is a unit measuring a transaction amount. A lot size is a unit measuring a transaction amount, right? Where you place orders in your trading platform, orders are placed in sizes quoted in lots. Now, types of lots, we have the standard, I talked about that just right now, which is 100,000 units. That is, it starts from actually 1.0 down to thousands, right? We have the mini lot size, which is 10,000 units. That one start from 0.1. Take note of that. 0.1 to 0.9, right? And we have the micro lot size, that is 1,000 units. We start from 0.01 to 0.09, right? And we have the nano, which is 100 unit, from 0.001. Now for each movement of a pip, we just talked about it, under a standard lot is $10. For the mini lot, that is $1. Calculate it yourself. That is 0.0001 times 10,000 gives you $1. That is $1. For the micro is 10 cents. That's 0.10 per pip movement. While for this 0.01 cent. As simple as that. So let's go to trading discipline. Trading psychology. Now you must note, trading is 95% psychology and just 5% analysis. You should know that it is 5% analysis and maybe risk management, right? So but 95% trading is psychology. So if your psychology is not balanced, bro, you're gonna be losing out of the market, and the market will just frustrate your entire being, right? So trading psychology. What is trading psychology? Is a broad term that includes all the emotions and feelings that a typical trader will encounter when trading. Some of these emotions are helpful and should be embraced, while others like fear, greed, nervousness, and anxiety should be contained. The psychology of trading is complex and takes time to fully master. Believe me, it takes a whole lot of time to master this. Now let's talk about the ones I wrote down there. I talked about fear of missing out. FOMO. Then just tell yourself, I won't FOMO. What is FOMO? Fear of missing out. Okay, you see a trade, and you'll be like, okay. You set your entry, you analyze your market, and you set your entry at GBP, for instance, 1.27000. And now you got to see the market at 1.27350, and you'll be like, wow, the market was rejecting so much there. Like, will this market drop to my entry? Let me just opt in anyway. From this point, maybe I should just opt in. Now you opt in. Immediately you enter the buy trade, the market start dropping, and eventually now drop to your entry. So that fear that you don't want to miss out of a trade, you just keep entering trades before it play to your analysis. That fear must be killed. You must destroy that fear. I was a victim of this actually. That impatience you feel when you want to enter trade, right? Just like today, for instance. Actually, I had a trade since yesterday. Yeah, I was selling GBP to the point, and I set my target until get there. I don't care. I'm gonna just wait. I just closed it recently, and I'm already on another trade to buy. So that impatience you feel, you have to kill it. You have to just kill it. Number two, taking control of the mind. Hmm. This is this is one major aspect. In fact, psychology on its own is a broad topic you can never get to know, even all the way 100%. Even people that have been trading for years, I mean 7 years, 10 years, they still tell you sometimes the market still play against their psychology. It still plays on their psychology. You see someone that is already trading. Alright, something happened just the second day of this year when the market opened. Ideally, I would have I would have just entered two entries. I will have just two layers on my trade. And unfortunately, there was a news that dropped on GBP, and the news was against GBP, and market was now falling heavily. Whoa! The fear of missing out now. And I was kind of, I'm sure my analysis market is going to go up. I kept on entering, adding positions, adding position. I had about, I think, 7 positions. Yes, 7 or more positions that day. I was like, what is wrong? Unfortunately, market never dropped. Oh, no, market didn't go up. It was still dropping. I was already running the loss of a drawdown of 50% on my asset. Bro, my psychology, the first trade of the year, my psychology was just like, what is wrong, man? You can't. If it were before, actually, I would have been so destabilized. But right now, actually, I've mastered my psychology to a certain level. But however, it was still playing on my psychology. Because how will I afford to lose 50% on the first trade of the year? That was a bad start, man. Actually, I had the trade because I didn't allow the trade to take control of my mind. Rather, my mind was taking control of the trade. If I'd allowed the market to take control of my mind entirely, I would have opted out of that trade with that -$50 or -$1,000 or -$200. My profit in my account was already reading about -$250 or $230. Imagine that. So I would have just closed it out. But because I had control over my mind, myself, and with the help of God actually, I had that trade for 2 days. And I ended up with profit. Imagine the market had played on me. I've already had not a wrong entry actually. Market played, the news played on my entry, number one, and actually had a wrong setup by entry multiple entries, even while I wasn't in profit. So that was where I was wrong. So, nevertheless, I stood still in the market. I took control of my mind instead of the market taking control of my mind. Right, so I ended up with profit in that market, and that was a huge start for me for the year. So number 3, chasing the market. Ooh, that's what I was doing. Chasing the market, chasing the market. Or you set an entry and the market has not got to your entry. Chill, take a chill pill, guys. Tell yourself, I'm gonna wait. Wait. The same way you're gonna wait for that lady until she says yes. Because just wait until the market says yes to your entry. Once the market says yes to your setups, right? So don't chase the market. Or something happened to me. Yeah, that was last 2 years when I was still trading crypto right now. So BTC dropped November 2022. I can't forget that experience. Actually, I lost my assets. So the market was dropping, but I saw my. That's one thing you must note as well. You must rely on your own analysis. I saw my mentors, different gurus in the market field, buying the dip. So as a newbie, actually, I entered. I was buying the dip, but the dip never ended. I was chasing the market. I didn't want to miss out of the market. FOMO, fear of missing out. And I was still chasing the market, and the market was controlling me entirely. Actually, chasing the market. I chased the market till the market chased me out. Quite funny though. And I lost all my assets. 2022 was was a huge drawdown for me in the financial market. I lost about $3,000 for a startup guy that didn't have somebody to sponsor you to fund your account. So it was huge for me actually. It was huge. So I lost everything, including my investors' money. I chased the market. The market chased me out. So don't chase the market. Chill. The market will play to your analysis. Now, the last one I'll talk about under this, revenge trading. What is revenge trading? It's this process whereby you had a trade. Okay, for instance, you want to buy on GBP. You set your stop loss. and the market just tap on your stop loss and just jump back up. That is very annoying. In fact, these are one of the most annoying times in the market. Market tap, I mean, just tap on your stop loss and it went back up, giving you maybe 50 pips profit up, and you're already out of the market. So you want to revenge trade, you want to bounce back on the market. So, guy, I no go agree. You no agree for me, I no go agree for you. So, is it that one of us? So you want to enter with number one, this one is already playing with your psychology. Number one, you want to enter with very big loss size. Number two, you want to just keep entering just to recover your loss and to make profit. So you're just entering, you're just entering. That was what happened to me back then. A lot of stuff happened to me. When psychology is being dealt with, your psychology is being dealt with, all of this will be happening to you. So you want to revenge trade. This happened recently to one of my guys. Well, it was good. He didn't set his stop loss, and unfortunately, there was an FOMC news that had a spike on gold. I mean, a very huge spike. So his account was already reading red. I mean, the whole of his accounts got liquidated. And along the line, before the account was liquidated, the guy said, "No, I'm going to fund him my account back. I'm going to sell gold." Thank God I encouraged him not to and listened. I'm going to sell gold so that I will recover my loss and make profit. Bro, gold never dropped that night. It went at another 100 pips up. If he had funded another money into that account, he would have lost it again. Tell yourself, I will not revenge trade. I will not revenge trade. Don't revenge trade. So this is all about this for now. Quickly, I'm going to go to the live chart. I think I wanted showing you what was it I wanted showing. Okay, basically that is all for now. There's no point showing anything. These are just the basics of trading, basics of Forex. Let me go to trading view. Let's see how it looks. How does your trading view looks like? How does trading view looks like? Trading view, where are that? Trading view. Where's my trading view? Okay. Trading view. Talking about spread. Wow, my trade is up, guys. My trade is up. GBP all the way, GBP all the way, GBP all the way, GBP all the way, GBP all the way. Right side. My trade is up. So I took this trade yesterday. This particular trade yesterday. Right. So. The spread, you might not see it well. Okay, this is not a broker. We use this for analysis. Let me use a broker now. Alright, so using a broker, the base. Okay, talking about the base currency. You see GBP. Okay, see GBP. Just focus here. Why is my drawing? See GBP USD. So that GBP is what we call the base. That is USD. We call the what? The quote right now. Oh. See, my head seems hot right now. I don't know what I'm doing, and I'm actually forgetting what I was saying. We talk about base and yes, the base currency which appears first on the and the quote or the variable currency. Yes, I was right actually. Pardon me for that. It just my head was. So I was saying GBP here. You see GBP, which is the base, USD, which is the quote, right? I'm trading GBP against US dollar. And what was my analysis? I said GBP is going to go up, right? It's going to appreciate against US dollar, and that is what is happening. Let me change it to 15 minutes time frame. It look more. So look at it. I enter the trade here. Look at what we have here. Market is going up. Where are we? I think we're on profit. We're on profit, right? So we're on profit. So let me. What am I doing right now? So the bid and the spread I was talking about. Look at this green line and the red line you are seeing moving up here. These two lines, that's what we call the bid and the ask price, and the spread rather. The gap in between. The market is very volatile right now. This is 2 o'clock. That's why you see it's very tiny. just wait and check it at night. It will be very, very wide. I mean, very, very wide. So that is the spread. When you see that, don't be scared. Don't be afraid that what is happening in the market. Don't be confused. And let's talk about one last thing under this market that I didn't put on the topic sections. So what is that? What is that? What is that? What is that? Let me go back. Right, so let's come here. As if I'm going to enter a trade. You see, you can see market execution. This simply means you are entering the market at the current price. It means you are entering where the market is exactly. But if you're going to buy exactly where the market is at these junctions. So this is our bid price and our ask price. Bid and ask price. So market execution, I mean this. If you click on that, if that's what your chart is showing, you are buying at that point. Now if you now change it to we have buy limit, we have buy limit, we have buy limit, we have sell limit, buy stop, sell stop. The ones I use here, these three. So buy limit means you are going to set it ahead that when market drops to a certain level, you should buy. You don't need to be online. Once you set it, you should buy by itself. Sell limit means when market goes up to a particular point, want it to start dropping, then you set it ahead. It's going to be dropping by itself. You don't need to be online. So these are the things. The buy stop and the sell stop. I don't use it. I don't bother to use it. Actually, I don't need it. So that is it. So that is it. So if I'm going to buy now, I'll just click on this buy. But I'm already on a buy, so I'm not buying. So that is it. I'm selling. Click here. I'm not selling. I'm already buying. That is quite funny, right? So that's just it about this video. Ask your questions, guys. Just ask your questions. And first is simple, and believe me, it's very profitable. Do you see me stretched out? If I'm on this trade, I'm on trades right now, guys. I'm on trades. I just showed you. At least I'm on how many trades at the moment? I think I'm running about more than 3 accounts. This is one at the moment. This is another one. Also running the same, trading the same thing, all of them. This is another one running. This is another one. My Meta 5 network quite bad. This one too is running. So about 4 accounts right now. So I'm not tense because I know what I'm doing by God's grace, and I've dealt with this thing we call psychology. I've understand more about psychology, though I'm still learning, but I've understand more. So that's just it. Walk through this video over and over again, understand this. So see you guys in the comment section. Ask questions and be committed to answer them. Bye bye.